Well, I think there's going to be a couple of things. One is back to the macro. What does it give us as an insight to consequence of already dollar strength that's occurred, but also what's happening in the Chinese economy, and maybe more broadly what's happening in the global economy. That is it showing signs of slowing more rapidly than people expected? That the consequence we've seen in stock market performance is actually showing you that there are real signs that actually that the economy going into 2019 is not as robust, and that fragility reflected into the Apple numbers. But actually we may see it in many other forms. We've seen some of the more coincident and lead-in economic activity indicators already showing signs of weakening in many parts of the world, not just looking to China. And I think that a micro level, back to what Steve was saying, that actually that there's the degree of, do we have to review that some of the sort of consumption and expectations around those more broadly in the tech world need to be reviewed? Because one of the things I would bring up as well that is going to be relevant for the other tech companies is that if we see this slowdown and we see some of the advertising revenue that's been such an important driver, all of a sudden that has come from a lot of companies that have no revenue and profitability, all of a sudden can't have that advertising that's been so much part of the the social media world. Are we going to start to see some of those forward numbers and indicators in some of the technology companies that rely on that start to have to come off as well?
So I mean, your thesis would be that the tech sector broadly, I mean, let's put Apple aside here, because at 12 times, I mean, I think the valuation doesn't look extreme. But are you suggesting that we actually have a lot of over-levered companies with bad balance sheets in the tech space that are going to look pretty shabby if this slowdown materializes?
I think it's less that we have significant over-leverage within some of those companies, especially the leaders. The challenge is that the forward earning profile is so much predicated on this sort of still strong growth and strong increase in economic activity around elements like advertising, that I think if you see economic slowing start to come through, you're really going to see it hit some of these companies. What are they going to pull back on? What is the discretionary spend in a meaningful way? It's going to be in some of the marketing, advertising, which again is such a big part of what they do. And that, I think, could be something that we'll be looking at through the course of 2019.
Andrew, does this story make the case for whether it's an Apple or another tech company to try to bring some of its production back to the U.S., given all of these tensions that we're seeing? Is there a bigger case to bring it home? It
still feels that it's early, but I would have thought many of these companies have to think about how do they build confidence around their supply chains. I mean, clearly that came out in the conversation for your exclusive interview, and I think that it's very important that when we look forward, they do have that plan B. Now, does it mean they start to change dramatically today? I think that is something they're already thinking and planning for. To actually make the material changes, I think still is something for the future. And again, I think it will be impacted by how quickly they see the slowing, how much they have to respond to the risks.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.